Welcome, everyone. I'm Mike Hebern, the Chief Operating Officer and one of the partners here at Level Financial Advisors, and I'm joined once again by my esteemed colleague, Mike Angelucci, CFP MBA extraordinaire. And today we thought we'd put out a quick video and talk a little bit about this recent news that came out from the SEC, which was that we're now going to be allowed to have Bitcoin ETFs. We've gotten some questions about this from our clients. What does this mean? So I think the best place to start this short video, Mike, is let's do a brief explanation in your words, first on Bitcoin and then ETFs and then combining the two and what that all means.
Okay, sure. Most people are probably familiar at this time with Bitcoin. It's electronic currency. The idea is that it's not subject to the U.S. government or any government. Its value as of now is really based on other people's belief in it as a currency. So I think the value today is maybe $46,000 a Bitcoin. Many people have probably heard that the value goes up when more people buy it. So that's going to be an important point that we'll touch on later. But a key aspect is right now its value is based on the belief that it will be a stable value of money over time.
Okay. And for those who don't know what an ETF is, maybe explain what an ETF is real quick.
An ETF is an exchange traded fund. It is the evolution of the mutual fund. So common ETF is the S&P 500 ETF. It simply owns the 500 largest stocks in the U.S. stock market, and you can buy and sell that throughout the day like a stock. And when you buy the S&P 500 ETF, you are owning the S&P 500, and you can do it during the course of the day, and the value goes up and down based on the S&P.
How is that different from a mutual fund that somebody might buy? How is an ETF different?
The benefits of an ETF are that, as I said now a second ago, is that you can buy the ETF at any time during the day
So
on an exchange. Intraday, exactly. A mutual fund, when you would buy a mutual fund in the past, you could call in and we might buy you a mutual fund, but it doesn't settle until the end of the day. So the value you buy it at was at the end of the day. The ETF is when the value is as of the moment we buy it. There's other good reasons to own ETFs. They're cheaper. There's no cost to buy and sell them. And secondly, they're very tax efficient, which may or may not come into play with the Bitcoin ETF.
Right, which explains why we have moved some of our models to ETF models, because they're more tax efficient for our clients and lower cost.
Yep.
And of course, the ETF environment, the ecosystem, is ever expanding. So there's constantly new ETFs. And so, which brings us to this recent news from the SEC, because before, I think yesterday or the day before, depending on which Twitter feed you believe when it came out, you couldn't buy Bitcoin through an ETF or in the market like that. You'd actually have to go to a Bitcoin
a custodian like a Coinbase and buy it. Right.
So why is this so newsworthy in your opinion? Like what's the big deal about this?
Well, the big deal is it gives people an easy way to buy Bitcoin if they want to buy Bitcoin. So through some brokers now, Fidelity, Schwab, you can go and you can easily buy Bitcoin as opposed to going to a place like Coinbase. So if you have other investments at a custodian, all your investments could potentially be there. But it's really ease of use. You don't have to have a third party like Coinbase, and it's easy to do.
So it makes it much more accessible to the average retail investor, I'm assuming.
Yes.
I guess the big question then, and this is the question that I think our clients are probably most interested in, well, let's start with, how does Level Financial Advisors and our team, how do we think about Bitcoin ETFs, and what's our approach to those?
At this point, we are not putting Bitcoin, whether it's direct Bitcoin or Bitcoin ETFs, and we have no plans to put those in our portfolios for our clients at this time. Bitcoin is really still, for all intents and purposes, a speculative investment. Bitcoin, as I said earlier, its value is solely based on others' belief that it has value. And it's been subject to manipulation in the past by Bitcoin evangelists that have moved the market for Bitcoin, and there's been some hacking of Bitcoin storage locations where people store Bitcoin. So there's a lot of risk, and it's also very volatile. The other big issue is, and there's not a lot of history with Bitcoin as an asset class. I like to tell people when we use an asset class, all the asset classes we use will never go to zero unless global capitalism collapses. We may own,
and let's hope that doesn't happen.
Well, we hope that doesn't happen. We sure do. But even the riskiest asset class we might hold for a client might be an emerging market ETF. And even if Brazil were to fail as an economy, that ETF still owns dozens of other countries' stocks in small countries. So that ETF would never go to zero unless capitalism failed. We don't know what will happen with Bitcoin in the long run. I mean, there's a lot of people that are saying they'll never sell it. It may maintain its value. But then even more importantly beyond that is any asset class you add to a portfolio, you really have to understand how it affects the rest of the portfolio. I always use the analogy, when you build a portfolio, it's like baking a cake or making chili. When you add ingredients to it, all the other ingredients are affected by the new ingredient you add. So adding Bitcoin to a portfolio, all we know right now is it's going to add volatility to the portfolio because it's about four times as volatile as the S&P 500, which means if the S&P 500 goes down 2, Bitcoin goes down 8. So, and one other thing about Bitcoin, while I'm rolling, one of the premises and one of the selling points of Bitcoin was it wasn't going to be subject to any government interaction. The Fed couldn't affect Bitcoin. It would be a good hedge against inflation. Well, what we saw in 2022 was it was not a good hedge against inflation. So we're still even questioning what is the value of that, even if you could make the case that it was a good hedge against inflation, which it has proven not to be.
Right, and even the SEC came out immediately afterwards and issued guidance to compliance officers of financial advisory firms saying, hey, this is a highly speculative, volatile instrument. Please take extreme caution when using it in your client's portfolio. So I think that the sum of the thinking here at Level is that right now, anyways, this is not something we're introducing into our models for obvious reasons, just like other asset classes that we wouldn't bring into our models. And of course, we'll continue to study and watch how the market develops, because this is just the beginning. I'm sure eventually there'll be all sorts of other instruments on mutual funds, maybe, and have Bitcoin in them. Who knows?
Yep.
So good. Any other thoughts on the Bitcoin?
No, just if you decide you want to buy into the Bitcoin ETF, just understand that it is speculative, that it has a lot of volatility, and that it's based only on the fact that other people have faith that it will maintain its value and grow in time.
Interesting. Okay. All right. I'm Mike Hebern, Mike Angelucci from Level Financial. Thanks for joining us, and have a great weekend.
Bye-bye.